Okay, part 2 of video number 1. And in this one, we're going to go ahead and look at scenario 2. An employer in Gary, Indiana employs 3 people whose taxable earnings to date prior to the current pay period are $9,400, $60,200, and $6,700. During the current pay period, these employees earn $2,200, $3,550, and $3,000 respectively. The applicable SUTA tax rate is 4.4%, and the 2013 Indiana SUTA threshold is $9,500. Okay, so looks like Indiana is not part of the state reduction. I lied, it is. It's right here. I was looking here for some reason. So right here, it is part of it. So we're going to be using 1.8% as the FUTA rate. Okay, when we're calculating FUTA. And it's got 3 employees. So the first employee, let's go ahead here, makes $9,400. So far, I'm going to put these up here so you don't get confused. I don't really like how the example has no designation of which one is which. It just says respectively. So, okay. Employee number 1 for SUTA. Let's go ahead FUTA first. FUTA tax. They've made so far $9,400, so there's no liability there. Okay. For SUTA rates, so far, the employee has made $9,400, and if I subtract that from $9,500, okay, I'm going to take $9,500 minus $9,400, that equals $100 left. So that 100 is the amount taxable for SUTA at 4.4%. Okay, so that's my SUTA tax rate here for employee number 1. SUTA at 440 and FUTA at 0 amount because they've reached it. All right, employee number 2. So far, they've made $60,000. So once again, they don't owe anything for that liability, or the employer don't owe anything for them as in liability. For SUTA, once again, SUTA, the cap is $9,500, and so far they made way over. They do not owe anything for that as well. So pretty good for that one. Straightforward. For employee number 3, okay. So far, we're looking at $7,000. They have made so far $6,700, which would equal another $300 to be taxed under SUTA. And I'm just gonna, excuse me, FUTA. And I'm going to go ahead and do this to it so it doesn't get crazy on us. There you go. Okay. So I'm going to take 300 then times the rate of 1.8% because the state of Indiana is working under a credit reduction rate state. Because of that, the FUTA tax rate is going to be a little higher at 1.8%. SUTA tax. The employee so far makes $6,700. but the threshold is 9,500. Okay, so I'm going to take 9,500 minus 6,700, which gets us to the amount left. Okay, and because employee number 3 did not make near, oh, they did, 3,200. So the only thing left to here, to tax is the 2,800 times the 4.4%. Because they made over, well, they made 3,000 this pay period, and only 2,800 is taxable under SUTA. So basically just took that amount. If they had, let's say, 4,000 left to be taxed under SUTA, I would take the entire 3,000 amount. All right, there you go. So number 2, employee number 2, we've got 3, well, actually scenario number 2, we got 3 different employees that we had to calculate FUTA and SUTA for. I'm going to stop here, and I'll come back for number 3 and hopefully number 4 into one video.